Welcome to Financially Free Gen Z. I'm Emma Barger, a marketing specialist at Coulee Bank.
And I'm Rachel Munger, a communications specialist at Coulee Bank.
In today's episode of our podcast, where we discuss all things finance and money for Gen Z, we will be talking about credit cards. Dun, dun, dun.
So, Emma, could you talk a little bit about how credit cards actually work?
Yeah, so in a really basic manner, you make a purchase and then the bank or financial institution will loan you the money to make that purchase, and then you have to repay that purchase or that amount back each month. And there's a few different types of options. You can make a minimum monthly payment, a partial payment, or the best option, pay off your entire balance.
Okay. And so, what are the benefits to paying off your entire balance each month?
So paying off your balance each month, there won't be any interest that accrues. And the credit cards then can be kind of thought of as a short-term interest-free loan.
Okay, that makes sense. So, if I'm paying off my payment every month, I'm not going to accrue interest on the stuff I'm charging on my credit card, and I'm not going to be paying any extra money for the stuff that I'm buying.
Correct. So there are a few other benefits of credit cards. A lot of them have reward programs. I know a lot of them have things like rewards on flights or hotels, cash back. It also can be safer than carrying cash just for security purposes, and it offers a stronger fraud protection. And it's also one of the fastest and easiest ways to build credit, which is something for our generation can be difficult and takes time. And it's also easy to track spending, which kind of leads us back to our budgeting episode we had last time.
Yeah, I know a few of those benefits are reasons that I finally started using credit cards, because for a long time I was very resistant to the idea of it. I just wanted to use my debit card and call it good, which there's definitely situations for that. But yeah, it was like I can get money back, I can build my credit and stuff like that. And so that encouraged me to make the switch over to credit cards.
Yeah.
There are some things to consider with credit cards, that there's potential for things to go wrong. And this really comes down to whether or not you're ready to take that step and transition over to credit cards. If you opt to not pay your credit card balance in full each month, there's the potential for interest to add up really quickly. I know, according to Forbes, the average interest rate can range between 16 to mid 20s on credit cards, and that's average across the board. And so those are higher rates than you're going to get on a more traditional loan or something like that. And so if I'm spending $1,000 on my credit card every month and I'm not paying it off in full, and I have a high rate on that, it can start to add up really quickly and become unmanageable. So once that interest begins to accumulate on the unpaid credit card, it can become hard for people to escape. And that's where you hear of those kind of horror stories of people who end up in $250,000 in credit card debt and they can't get out of it. So you really need to be prepared and responsible if you're going to use credit cards.
Right. And Rachel, you talked about it a little bit earlier about how you were a little bit nervous to start credit cards, as was I. I always thought of it as a big, scary thing. And the horror stories really do get to your head when you think about it. And so I feel like that's why a lot of Gen Zs like us are less inclined to hop on the credit card wagon. We also have just that fear of falling into a debt spiral, like you were saying, where we're just constantly playing catch up. We also have lack of access to credit. So you need credit to build upon and be able to get opportunities. So you have to start somewhere, and that can always be a little bit difficult. And I feel like now, especially since my online shopping has gotten a little out of hand, I've seen a lot of the BNPL, buy now, pay later. So That
Yeah.
is definitely something too that's probably affecting our generation and
Yep. Yeah, they say a large group of Gen Z is opting to use buy now, pay later rather than credit cards because they sometimes view it as a safer option, which is not necessarily true. You might not upfront see those big interest payments, but if you do miss a buy now, pay later payment, you're still going to end up with some sort of additional charge. And so there's a lot of different options for buy now, pay later. If you haven't heard of them, there's like Affirm and Afterpay and Klarna. And a lot of the times you'll see these if you're doing some sort of online purchase. At the end of your checkout, it'll say you can do this in 4 interest-free installments over like a month or something. And most commonly, it's used on like clothing purchases, electronics, furniture, appliances, those sort of payments. So there definitely can be a good use for them, but it's the same as credit cards where you just have to be responsible and not spending outside of your means. And just know that eventually you're going to have to pay it. Like it's not free money. So,
right, right. And I think the biggest thing is uh don't get a credit card if you can't handle it. I feel like it's 100% okay to wait until you're ready to take on that responsibility because it is a responsibility. It's not just free money. It
mhm.
can't just be thought of it like that. Um, and going back to our last episode about budgeting, if you have a tendency to overspend and you know this about yourself, especially if you've started implementing a budget, a credit card might not just be the best option at this point in time. Um,
Mhm.
it could lead to some
Yeah.
problems.
Yes, definitely. Some potential for debt. But if you are ready for it, there are a lot of great benefits like we talked about before. And it is a chance for you to start building credit earlier rather than later. So if eventually you're wanting to get an auto loan or a mortgage or something like that, you have credit history because credit history is something that's factored into your credit score. So even if you've like never missed a payment and like on paper you would think you'd have a great credit score, but if you've only had like credit for 6 months, that affects your credit score a lot. So just something to keep in mind.
Yeah.
Next up, we have a guest from Coulee Bank who's here to discuss a little bit more about credit cards and how powerful they can be if they're used correctly. So, with us today, we have Jason Vaughn, Retail Market Manager at Coulee Bank. We just want to say thank you, Jason, for joining us today and sharing your knowledge.
Yeah, thank you.
So, first off, could you tell us why you think it's important for younger generations to be knowledgeable about the power of credit cards, both good and bad?
Yeah, I think like what you guys stated, a lot of individuals, especially younger generation, don't really understand how to use their credit cards. And I've always advised for people for years, especially those new to credit, to get their first credit card and not even necessarily use it. What most people don't know is that you can get a credit card and you can just cut it up when you get it, and then the credit reporting agency will credit you a positive mark on your report every month for 12 months. So that's kind of a quick way for you to build credit and quickly, as you alluded to be able to make more financial purchases later on.
That's awesome. I
Hmm.
didn't even know about that.
Yeah, that's really smart.
All right. So, as a Gen Zer myself, the thought of debt really does scare me. So, based on your experience personally, and as well as being an industry professional, what would you say to someone who might be intimidated or scared of debt?
Well, the first thing I would say is that you should never be afraid or scared of debt. Obviously there's good debt and there's bad debt. And just by knowing and understanding the difference, you can definitely make better choices when it comes to that debt. So, for example, like a good, debt would be purchasing of a home. Most people don't have the cash to purchase a home, so you'd go out and get yourself a home loan and, purchase an asset that then builds equity later on that you could maybe even use to purchase another home or to even start a business. Speaking of businesses, business loans are another great loan that you can get. For some of us, we're not used to working in office space, or we don't want to work in an office space, so we are a little more free, and we want to be able to create our own business and create our own thing. And business loans are a perfect opportunity to do that. So obviously, bad debt, credit cards can be bad debt, just like you said. If we get into that financial hole where we're only making those minimal payments and we're not paying down our balances, but also some of the other debts that you can get yourself into that would be considered to be bad would be like predatory car loans or title loans, or doing those payday loans that can be 120%.
Oh,
So you
wow.
definitely want to avoid those as much as possible, and come see a financial person before you go to one of those institutions.
Yeah, I know a lot of those payday loans can really just be a financial literacy thing. Like if you don't know what you're getting into, it's very predatory and can set you up for failure. So, if someone is interested in getting a credit card or has questions about how to responsibly use one, what would you recommend they do?
Just like with anything, if you're not knowledgeable, find somebody who's an expert in that area. So most of the time you can visit, like your local financial, and maybe speak with a banker or an advisor there, and they'll be able to, walk you along that path. And I would say, obviously, if you don't have a financial or someone that you can call, you can always contact us here at Coulee Bank. We're more than happy to provide any answers for you to your questions and help guide you along your decision-making process and put you on that path of financial stability.
Awesome.
Awesome.
Well, thank you for joining us. I think the number one thing I was able to take away from that is the idea of getting a credit card and not even necessarily using it.
Yeah, and honestly, like, being a recent graduate of college, I have quite a bit of debt myself, and so it's really reassuring to hear that, not all debt is bad debt, and it can um, help me in my future, especially if it is, a couple years down the road, hopefully a little
Mhm.
more, when um, I'm thinking about taking out some big loans again.
Mhm.
So I learned a lot about credit cards, and I feel like they can be really powerful. And this has been kind of an empowering experience for me. And I do have credit cards, two of them.
Mhm.
Both of them don't really have that great of rewards. I feel like I
Mhm.
might need to rethink my decision and maybe find something that works a little bit more for me. So I mean, I love the idea of cash back. I feel like
Yep.
that could just, maybe cover my morning coffees or
Mhm.
add something to my daily routine that would be
Yeah.
nice just to be covered just by, you know, consistently using a card on groceries or gas or
Exactly.
whatever it might be.
I think the card that I currently use, it's like 1.5% cash back or something, which doesn't sound like a lot, but I do all of my purchasing through that card. And so at like the end of the year, it does come out to a decent sum of money that was saved.
Right, you're right. And especially also like now that we're finally getting back to normal life and the thought of, COVID is a little bit further behind us and we're all getting more comfortable with it. I feel like maybe even for those that are really into travel or want to find some new experiences, like we mentioned earlier, those ones with the hotels or the flights
Hmm.
might be a good option. I mean, I haven't been a big traveler for the last couple years, like
Hmm.
many others,
Yep.
but down the road, that might be something I would want to consider too.
Yeah. And I do know it's also important to not go like way out of hand where you'll see some people who have like 20 different credit cards. And
Right.
each time you apply for a credit card, it does reflect in your credit score a little bit. So if you are in the process of like trying to buy a home or get another sort of loan, just be aware of that. Like if you are in the clothing store and they're like, do you want to save 20% by
Oh
opening
my
this credit
gosh,
card?
those are
If
so it is so hard
exactly
to turn those down.
you fill out that application and they're doing a hard check on your credit. And so that does impact your credit score a little bit. So just be aware of that. I know some stores, I was just reading like the Target Red card, they offer a credit card. They also offer a debit card where you can get 5% cash back. So definitely just do your research in whatever kind of cards you're thinking about getting.
Yeah, know what you're getting into for sure.
Hmm.
I will say those retail the retail like at the mall, when you go to the mall, every store you stop
Yep.
in, would you like to open up a credit card today? Would you like to open a store card? Your
Exactly.
balance will go from $250 down to $75 today. Like,
Which sounds great.
sounds
but
great, but every time
I don't want
just
25 credit cards.
decline. So,
Mhm.
all right. Well, thanks, Jason, again for being on our podcast today. I feel like you shared a lot of great insight for other, really just everyone. I mean, I know this
Mhm.
podcast is Gen Z, but I think that there is a lot of stuff in there that everyone could benefit from.
Definitely. Yeah, thank you so much for joining us. We will be back next month. We are going to be doing monthly episodes, so make sure you follow us on wherever you get your podcasts so that you can see when our next episode comes out. And we look forward to being with you all again in a month. Thank you so much for listening.